I really hope this isn't you, but picture this. Someone, let's say so we won't offend anyone, his name is John, finds a $285,000 home here in San Antonio. They pull up the mortgage calculator, revert back to middle school algebra where they barely passed with a C. They punch in the numbers and it's about, okay, $1,200 a month. That works, I can do that. Your math is not mathing, your math is wrong. So they buy the home because no one will read the DocuSign with them, and then their first bill shows up, $1,000. It's not $1,200, it's closer to $3,000. What happened to the extra $1,600? Property tax, homeowners insurance, mortgage insurance, the HOA, the water bill in July when it was 103 degrees and it felt hotter, the AC part that broke down in August. Nobody walked through any of this before they signed the DocuSign and made the home theirs. This video fixes that. We're going to be walking through every single cost one at a time in plain English, not German, with real numbers, and by the end you'll know exactly what to expect. Buying a home is probably one of the biggest purchases you'll ever make in your lifetime. You deserve to know exactly what's going to cost. So today we're going to be building the real numbers together from the ground up, one cost at a time, and by the end you'll probably know exactly what to budget for. By the way, hit that subscribe button right there. You see this one right over here, so you can know what's happening in the San Antonio market and get market updates. Let's get into it. The home we're going to be using as our example. Before we get everything into the cost, we need a real home to be able to work with. So let's use a typical San Antonio home in 2026. $285,000, 3 bedrooms, 2 bath, a solid neighborhood. Let's say somewhere in the northwest side of San Antonio, Shorts area, or let's just also keep it simple with the northeast side of San Antonio. Move-in ready, nothing fancy at all. This is basically the medium priced home in San Antonio right now. Now, how much you're going to put down matters a lot. So we're going to be running 2 versions all the way through. To keep things simple, we're going to be using version A and version B, assuming no down payment assistance or rate buy downs at all. Version A is going to be 5% down. That's roughly around $15,000 out of pocket. This is how most first-time buyers enter the market. Version B is 20% down. It's around $60,000. That's for buyers who have saved up, maybe selling from a previous home. These numbers, version A is $285,000, almost $15,000 down with for a loan of $270,000, 30-year mortgage at close to 7% interest rate. The numbers for version B is $285,000, almost $60,000 down, $228,000, 30-year mortgage around 6.5 interest percent. Bigger down payment usually gets you slightly better rates. Keep these 2 scenarios in mind as we walk through each of these costs. I'll give you the numbers for both every single time. The 8 cost, one at a time. Cost number 1, your mortgage payment. One of the things that everyone focuses on. This is one of the things, one thing to know about. The mortgage payment is the number that shows up when you type in your home price that you're looking into the online calculator. Here's a quick explanation of what's inside it. Your monthly payment has 2 parts. Principal, that's the part that actually pays down what you owe on the home loan. And the interest rate, that's the fee that the bank charges you for lending you the money. Here's something most people do not realize. In the early years of a mortgage or a home loan, almost all of your payment goes into interest. Very little actually reduces the loan balance. That changes over time, but at the start, it's mostly going into the interest rate or the interest. The numbers, version A monthly payments around $1,756 per month. $285 goes towards what you owe. $1,460 goes into the bank interest. Version B, around $1,442. Your payment number 1, $266 pays down the loan. $1,177 goes into interest. The good news, this payment never changes. It's the same number for 30 short years. In a world where rent keeps on going up, the lock-in payment becomes more and more of an advantage over time. Let's run the running totals. Mortgage payment, $1,756 a month. Version B, $1,442 a month. Cost number 2, property tax. Okay, This is the monster that hides underneath the bed. This one's a big one. This is the cost that catches more San Antonio buyers completely off guard than anything else. If you're moving here from another state, please pay close attention to this section right here. Texas does not have a state income tax. You probably heard that numerous times. What people do not mention in the same breath is that Texas makes up for it partly with property tax. And in Bexar County, San Antonio, property taxes are high. We're talking about 2 to 2.5% of your home's value every single year. Let's show you what that actually looks like in dollars. The numbers at 2.2, it's almost $7,000 per year in property tax. Broken down monthly is $522. Numbers at 2.4 is once again almost $7,000 a year, around $600 a month. Your lender automatically rolls this monthly payment so you don't get one giant bill at the end of the year. But it's very real cost and it does not go away. Here's a heads up. Moving from Colorado, the property tax, which is less than 1% on the same home, you're going to be paying $1,568 a year. In San Antonio, you're going to be paying around $7,000. That's over $400 more per month, every single month, every year, for as long as you own the home. Saving tips. File your homestead the moment you close on your home. It's free. It reduces how much you own on your home value gets taxed and puts a cap on how fast your tax bill can grow each year. Don't skip this step at all. The running total numbers, property tax, both versions, roughly around $600 per month added onto your monthly payment or your payment. Cost number 3, homeowners insurance. This one surprises a lot of people also, especially folks coming in from states where insurance is significantly cheaper. Texas homeowners insurance is one of the most expensive than the national average. Why? Because Texas gets hailstorms, high winds, extreme heat that damages the foundation, and flash flooding. Insurance companies know this and they charge accordingly. On top of that, some insurance carriers have started pulling back from Texas, which means less competitions and higher prices. The numbers in San Antonio expect to pay between $2,000 to almost $3,000 a year for homeowners insurance. That works out around $167 to $250 per month. One important thing, use standard homeowners insurance does not cover flooding. Not one penny of flood damage. If your home is in a flood zone, you need to separate flood insurance policy on top of your regular coverage. That's another $75 to $120 per month. Watch out for this. Do not assume you're covered for flooding just because it rained hard. Homeowners insurance and flood insurance are completely separate policies. This is one mistake that has cost San Antonio homeowners tens of thousands of dollars after major storms. Here's a save money tip. Get quotes from at least 3 insurance companies before you close on your home for the exact number of coverage. We've seen quotes vary between $600 to almost $1,000 per year between companies. That's real money and most people never shop around. Now let's look at the running total. Homeowners insurance about $190 per month. As a safe estimate, add $75 to $120 a month for flood insurance if your home is in a flood zone. Cost number 4, PMI. Only if you put less than 20% down. PMI stands for private mortgage insurance. Here's the deal. If you put less than 20% down, your lender requires an extra insurance. It protects them, not you. If you stop making payments and you pay for it every single month until they've paid off enough of your loan, you own at least 20% of the home value. Now let us look at the numbers. Version A, 5% down, typically runs between $135 to $181 per month on this loan size. Version 2, 20% down, 0, no PMI at all. PMI eventually goes away, but it usually takes between 9 to 11 years of normal payments before it cancels. You can ask to have it removed earlier if your home's value has gone up and you can prove it. Here's a heads up though. Over 9 years, PMI at $150 per month is around almost $17,000 to protect the bank. It's not one of the real costs buying with a small down payment, and it's a solid reason to save up if you can. Now let's look at the running total. Version A, $155 per month. Version B, $0. Cost number 5, the HOA fees. HOA stands for Homeowners Association. A lot of new communities in San Antonio have one. If your neighborhood has an HOA, you pay monthly fees to help maintain shared spaces. Things like entrance, the community pool, walking trails, landscaping. The HOA fees vary a lot depending on the neighborhood that you choose. The numbers, basically, HOA will not much going on between $30 to $60 per month. Mid-level communities with a pool common between $75 to $150 per month. Larger planned communities with lots of amenities between $175 to almost $300 a month. Not every home has an HOA, but a lot of newer subdivisions in San Antonio do, and buyers often forget to factor it into their budget. Watch out for this. Before you close, ask for the HOA's financial records. An HOA that does not have enough money saved up for future repairs might hit all homeowners with a big one-time charge called special assessment, sometimes between $2,000 to $10,000 per home with little warning. Here's a save money tip. Ask your agent to pull 2 years of HOA meeting minutes. These records will tell you if there's any ongoing problems with upcoming expenses or neighborhood disputes you don't find out about on the another way out. Running total, HOA fees $0 if no HOA. For a typical newer home in San Antonio community, budget around $75 per month. Cost number 6, repairs and maintenance. Now here's the thing. Here's the cost that new homeowners almost always underestimate. When you're renting, things break down, you call your landlord to fix them. When you own it, things break down, you pay for them. And the things that will break: air conditioners stop working, water heaters rust out, roofs get old. In San Antonio specifically, the extreme summer heat is a real hard on your home's mechanical systems. Things wear out faster than they would in mild climates. A simple rule of thumb: set aside 1% of your home's value each year and every year for maintenance and repairs. The numbers, 1% rule would be $2,850 per year, or almost $300 per month to set aside. Some experts know how hot San Antonio gets, recommend 1.5%. That's almost $5,000 per year, or about almost $400 per month. Watch out for this. The year after you buy is when maintenance hit the hardest. Even with homes get that past inspection, you'll discover things once you move in. Set aside $3,000 to $5,000 specifically for your first year on your regular monthly reserves. Saving money tip: get an annual HVAC tune-up. Usually between $150 to almost $300 in San Antonio. It's the cheapest thing that you can do to avoid $3,000 repair bill in middle of July. In a city where it's hot, broken ACs is not comfortable, it's dangerous. Now let's look at the running total. Maintenance reserve between $300 to almost $400 per month. Use $250 a month as a budget number and keep it in your separate savings account. Now let's look at cost number 7, utilities. Most cost of homeownership conversations skip utilities entirely. We're not going to do that because in San Antonio specifically, utilities are a real line item, especially your electricity bill during the summer heat. San Antonio electricity comes from CPS Energy, which is a city-owned utility. In the spring and the fall, the electricity bill is pretty reasonable, maybe $80 to $130 per month. But in July and August, the AC runs almost consistently. Bills run almost $400 on a normal sized home. Is not unusual. That's just life here in the summer. On top of electricity, you get water and sewer through SAWS, the San Antonio water system, figuring out $60 to $90 a month for a family, and natural gas from CPS and stove and water heater around $20 to $40 a month over the summer and up to $140 in the winter. The numbers, add it all up, for a 2,000 square foot home, electricity average is $175 per month, water, sewer, $75 a month, gas, $60, blend mortgage advantage between $310 with summer months running between $150 to $200 higher than that. Save money tips. Newer homes are built a much better electricity standard than older ones. If you're comparing a new home construction to a home built in 2005, the newer home could save you between $400 to $600 a year in electricity alone. That's worth factoring into comparison. Now the running totals, around $200 to $310 per month on average. Budget higher for the summer. Your July and August bill will be noticeably bigger. Cost number 8. Closing costs. Closing costs are different from anything else we've covered. They're not monthly costs. They're a one-time bill you pay the day you close on your home before you ever make a mortgage payment. In Texas, closing costs typically runs between 2% to 4% on purchase price. On a $285,000 home, that's between $6,000 to $12,000. That money covers things like loan origination fee, your loan, the lender charges, title insurance and appraisal, prepaid interest, and set ups your tax and insurance escrow account. The numbers, using the 3% medium estimate, that would be close to $9,000 in closing costs. Version A, you're looking at almost $15,000 down. Version B, that's almost $16,000 plus $9,000. That's around almost $70,000. Here's a heads up. Here's the mistake we see constantly with first-time buyers. They save up exactly enough for the down payment and then discover they also need thousands more for closing costs. The down payment and closing costs are completely separated. You need both. But here's a save money tip. Ask the seller to cover your closing costs as part of the negotiation. In today's San Antonio market, motivated sellers, let's say yes to contributing between $5,000 to $10,000 toward closing costs. That does not change what you pay for your home. It just reduces how much cash you need on the closing date. Running total now. Closing costs between $6,000 to $12,000 one time at a closing cost. Budget 3%, which is almost $9,000. This is on top of your down payment. The grand total, what you're actually paying each month. Let's get into it. Now let's look at everything up and let's add up everything and let's see how much it's going to be. This is the moment of truth, the real numbers, all 8 costs combined. Version A, monthly payment, $1,756 property tax, $535 homeowners insurance, $190 PMI, $155 HOA, $75 maintenance reserves, $250 utilities, $310. Your real monthly cost is $3,271. Version B, property tax at $535, homeowners insurance at $190, PMI at 0, HOA at $75, maintenance reserves at $250, utilities at $310. Your real monthly cost, $2,802. Now, let's go back to the moment at the beginning of this video. Someone sees $1,756 on mortgage calculator and thinks, I can handle that. The real cost though, $3,271. The gap is $1,515 every single month. That's not a hidden or a secret. It's just not the number that gets advertised. Here's the bottom line. Budget for real numbers, not a calculator number. The difference between $1,756 a month and $3,271 a month is a difference between a budget that holds and one that breaks. Now, let's look at how to bring these numbers down. Here's the good news though. Several of these costs are not set in stone. You have real options to reduce them. Property tax, 5-year appraisal every year. The Bexar County Appraisal District regularly assesses homes too high. Filing to protest is free. It's online, and homeowners who do it regular often save between $500 to $1,500 per year. Most people don't even bother at all. You should every single year. Homeowners insurance. Shop it every single year at renewal. Don't just let it auto renew. Call around and use a broker. The market changes. A 50-minute effort could save you between $300 to $500 a year. PMI, get to 20% equity as fast as you can. Every extra dollar you put towards the loan helps you get there sooner. When you hit 20%, the PMI goes away permanently. That's $155 a month back in your pocket forever. Maintenance, spend a little to avoid spending a lot. Get an HVAC service every spring before the summer hits. Fix small stuff before it becomes big stuff. Preventive care is the cheapest maintenance there is. Now a save money tip. VA loans, no PMI ever. If you're a veteran or active military and you qualify for a VA loan, you'll never pay mortgage insurance, not a single month. And version A, that's $155 per month you keep over 9 years. That's almost $17,000 you save. It's one of the most valuable benefits of VA eligibility in this market. And one final thing, buy the right home for where you are in life right now. If you buy a home you're outgrowing in 2 years and have to sell, the cost of buying and selling combined, agents fees, closing costs, transfer fees runs between 8 to 10% on the home's value. On a $285,000 home, that's between $23,000 to almost $30,000 in and out. Match the house to your actual life plan. If this video did its job and you now have a real number, not just something you show in a mortgage calculator, the actual number of owning a home in San Antonio in 2026, and if some of those numbers surprise you, that actually is a good thing. Better to know now than to find out after you already closed on your home. Rosa and I work with buyers every stage of this. Whether you're starting out to figure out what you can afford, whether you're starting to look at homes, or just want to sit down with someone and run specific numbers for your life and your family's life, that's exactly what we do. No pressure, no sales pitch, just honest information about the actual numbers for you and your family. Link is in the description to reach out to us, and hit that subscribe button for weekly San Antonio market updates. Real numbers, plain talk every single week. Thank you for watching, and I want to hear from you. Which cost of this list surprised you the most, or did something hit you in your first year of owning a home that we did not cover? Drop it in the comments below. I read every single one of them. Like, share, subscribe. Subscribe button's right here. You see it?